Welcome, deep divers. Okay, so you've brought us a really interesting set of sources today. We've got stuff from Investopedia, the Economic Times, even the Financial Times, and they all seem to be pointing towards Bitcoin being at this, well, pretty crucial point right now. So our mission today is to really get into that. We'll look at the recent price ups and downs, try to figure out what's pushing things around, especially from, central banks, and then maybe zoom out a bit to see how Bitcoin's fitting into the bigger financial picture. Basically, pull out the key stuff you need to know.
That's a great summary. And what's really striking from these sources is this kind of tension almost. You see Bitcoin getting pulled around by traditional macro news like Fed announcements, which sort of challenges that old digital gold idea. But then, at the same time, it's making undeniable inroads into mainstream finance. It's like these two worlds colliding. That intersection, that's what we really need to dig into today.
Yeah, that's a key point. It's not just numbers flashing on a screen. There are bigger shifts happening underneath.
Yeah.
So let's start with those numbers, though, because the sources you flagged show Bitcoin's taken, well, some noticeable hits lately. What are we actually seeing?
Well, yeah, looking at the data, it's been a bit volatile. There was that drop, roughly 10% from the high back on August 14th. That was $124,290. And then more recently, in the week ending August 19th, another dip, almost 4%. That brought the price down near $114,000.
Okay. So a definite cooling off.
For sure. A noticeable pullback in a fairly short time.
And what are the sources saying is the main reason for this particular spell of volatility? It feels pretty sharp.
The main driver, and this comes through really clearly in the analyses, it's all about market nerves ahead of the Federal Reserve's big meeting, the Jackson Hole Symposium. Investors were basically bracing for Fed Chair Powell to sound potentially, well, hawkish.
Hawkish, right, meaning tighter money policy.
Exactly. Higher rates or keeping them high for longer. And this wasn't just vague worry. It actually moved the markets. The chances of a rate cut in September, according to futures markets, they plunged. Went from something like 92% likelihood down to 73%.
Wow, okay. That's a significant shift based just on expecting what someone might say.
Precisely.
Okay, let's unpack that. A hawkish tone from the Fed. Normally that strengthens the dollar, makes safe stuff look better. But Bitcoin was supposed to be this, alternative, a hedge against exactly this kind of central bank action. Isn't it a bit ironic how much it reacts?
It is ironic, and that's a great point you raise. It really highlights something fundamental that the sources are picking up on. Historically, yes, a hawkish Fed makes riskier assets less attractive. Think tech stocks, growth stuff. And what we're seeing is Bitcoin behaving, well, much more like one of those traditional risk-on assets now.
Less like digital gold and more like digital tech stock.
Kind of, yeah. It suggests the market's maturing, maybe. Or at least that more traditional investors and strategies are influencing the price. So when they anticipate higher borrowing costs, a tougher economic climate, they de-risk. They take profits off the table.
So they're selling Bitcoin alongside other risky things until the Fed gives a clearer signal?
That seems to be the immediate reaction, yes. Reducing exposure until the macro picture looks a bit clearer.
Right. That makes sense, showing how integrated it's becoming. But, market moves aren't always simple. What are the analysts saying beyond this immediate Fed reaction? Is this dip just noise or something else?
We basically get two main schools of thought coming out of the articles you sent over. On one hand, some analysts are calling this a consolidation phase.
Consolidation, meaning?
Meaning the market's just taking a breath after running up, pausing. It's often driven by wider uncertainty, inflation worries, global stuff. During these phases, there's often a bit of indecision. Buyers and sellers are kind of battling it out before a clearer trend takes shape again, like catching its breath on a climb.
Okay, so one view is it's just pausing. What's the other take?
The other view, from a different group of analysts, is that this dip could actually be a buying opportunity. They think the price might be finding a floor, maybe getting ready for the next leg up, perhaps anticipating some good news down the line.
Like what kind of good news?
Oh, could be anything, really. Maybe clearer regulations, more big companies getting involved, or even if the Fed ends up sounding less hawkish than feared. For these analysts, it's a chance to get in at a lower price before a potential rebound.
So consolidation versus buying opportunity. That sounds confusing for someone trying to figure out what's actually going on. You hear one thing, then the complete opposite. How do you make sense of that? Is it just fear versus greed playing out?
That's exactly the challenge, isn't it? And it really shows how complex reading these market signals can be, especially for something relatively new like Bitcoin. It's maybe less about picking one right answer and more about understanding why people hold these different views. The consolidation folks are probably looking more at the big economic picture, the caution from institutions, while the buying opportunity camp might be focused more on Bitcoin's long-term story, its disruptive potential.
So you need to weigh both sides.
Exactly. And savvy investors, as your sources suggest, look for other clues. What are the charts saying? What are the long-term holders doing? Are they selling or accumulating during this dip? If lots of long-term holders are buying now, that might support the opportunity idea. If selling continues and key price levels break down, that points more towards further consolidation, maybe even more downside. It's about looking at the whole picture, not just the headlines, understanding the narratives behind the price.
That's a really important point, separating the short-term noise from the potential long-term signal. And actually, speaking of the bigger picture, beyond just the price, your sources also pointed to something else happening almost at the same time as the Fed meeting, something that tells a different, maybe even bigger story.
Yes, absolutely. While everyone was watching Jackson Hole, literally just an hour's drive away, there was another significant event, the Wyoming Blockchain Symposium.
Ah, right. The Financial Times piece highlighted that.
It did. And its significance is huge, not just because it happened, but who was there. It really underscores this parallel track Bitcoin is on.
Okay, tell us about that. Who was there? The FT made a point of listing them.
Yeah, it was quite the mix. You had top cryptocurrency executives, obviously, but you also had senior U.S. policymakers. They specifically mentioned Paul Atkins, a former SEC chair.
A former SEC chair at a blockchain conference. That's interesting.
Very. And alongside them, you had figures from traditional finance, heavyweights. The fact that all these different groups were in the same room, seriously discussing crypto. That's the real story here.
So what does that gathering actually signify then, beyond just networking?
It signifies the rapidly growing political influence, the growing legitimacy of Bitcoin and digital assets. It's moved way beyond niche tech forums. We're talking about mainstream financial and policy discussions now.
And what were they discussing specifically?
Key topics were things like stablecoins, how they bridge crypto and regular money, also token-based treasury strategies for companies, and just the broader integration of crypto into the existing financial system. This isn't just hype or speculation anymore. It's about the actual plumbing of finance, regulation, how these things will work together.
So regulators aren't just watching from afar, they're actively engaging.
Actively engaging, participating. That signals a real shift in perception, a move towards figuring out how to incorporate these assets, not just dismiss them.
It really does feel like, the establishment and the innovators are finally sitting down together to figure things out. If we pull back and connect these dots, it seems Bitcoin's story isn't just about price volatility anymore. It's about this deeper integration. How does that change things long term?
It changes the narrative profoundly. This kind of high-level engagement pushes Bitcoin's relevance far beyond just its market price. It starts shaping actual policy, actual regulations. Digital assets are becoming part of the public policy debate, not just an investment class.
Which could mean more rules, potentially.
Potentially, yes. More regulatory clarity, which is a double-edged sword, right? It brings legitimacy, opens the door for big institutions. But it also means more compliance, maybe less of the Wild West freedom. Look at the stablecoin discussions. Bringing them into the regulatory fold could be huge for adoption, but it comes with rules.
So the path forward isn't just disruption, it's more like integration, evolution within the system.
That seems to be the direction, a complex dance between the new technology and the existing financial order. It shows that the future of money involves tech, yes, but also governance, policy, and finding ways for old and new systems to actually work together.
Okay, so wrapping up this deep dive then, the key things we've pulled out are, first, Bitcoin's price is still quite sensitive to traditional signals, like Fed pronouncements. It's acting, in some ways, like any other major asset. But at the exact same time, there's this undeniable trend, highlighted by events like the Wyoming Symposium, showing Bitcoin and crypto gaining serious traction. Real political and financial legitimacy, it's moving into the mainstream.
Exactly. And that leaves us with a really interesting thought, doesn't it? You have this dual dynamic, market prices reacting to the old guard's policies, while the new guard gains influence and legitimacy. So how does that tension resolve itself? How will this push and pull between traditional finance and digital assets fundamentally change how we even think about money and value over the next few years? What questions does that make you start asking?